Today's video is about an important XRP update, but also about understanding what is really happening in the market right now. At first glance, it may feel confusing. Good news comes out, and yet prices move down. XRP pulls back, Bitcoin drops, the broader market weakens. So the real question is not what happened to XRP. The real question is what is driving the market today. Let's take a step back and look at the bigger picture. Right now, we are seeing a pullback across crypto and traditional markets. And this is not random. It is not panic without reason. It is not related to bad XRP or Ripple news. The reason comes from macroeconomics. The Bank of Japan is signaling upcoming interest rate hikes, with a key meeting scheduled for December 19th. According to reports, internal discussions also point toward additional rate increases, potentially extending into 2026. As soon as this information became public, markets reacted. Crypto pulled back, stocks pulled back, risk assets weakened. This is not surprising. When central banks tighten monetary policy, liquidity becomes more expensive, risk appetite decreases, and assets like crypto, which sit higher on the risk curve, feel that pressure first. That is why we saw XRP briefly drop below the $2 level. That is why Bitcoin moved under 90,000. That is why equities also showed weakness. This type of reaction has nothing to do with XRP fundamentals. It is a liquidity-driven response. We have seen similar situations in the past. In earlier years, concerns around sovereign debt or interest rates caused temporary fear, only for markets to stabilize later. Japan, of course, is a much larger and more influential economy, so the impact feels heavier. But the principle remains the same. Short-term price action often reflects macro conditions, not long-term value. Looking at the charts, XRP dipped below its trend line, reaching levels near $1.96 before bouncing. Bitcoin tested support around 89,500. Ethereum briefly approached the 3,000 level and managed to hold. The stock market followed the same pattern. The S&P 500 declined. Volatility increased slightly, with the VYX moving higher, though still within a relatively controlled range. This tells us something important. Fear is present, but panic is not dominant. Friday sessions are often tricky due to options expiration, low liquidity, and positioning adjustments. Markets can move quickly in either direction, and crypto often mirrors these movements because of ETF flows and broader risk correlations. This is why today's price action should be viewed through a macro lens, not an XRP-specific one. Now, with that context in mind, let's talk about the real XRP news. Ripple has received conditional approval from the U.S. Office of the Comptroller of the Currency to charter a national trust bank. This is not a marketing announcement. This is not speculation. This is a regulatory milestone. It places Ripple directly under federal oversight, alongside state-level supervision, particularly through New York regulatory frameworks. This matters. It matters because institutions do not engage seriously with companies that sit outside regulatory boundaries. They require compliance, transparency, and accountability. Ripple choosing this path sends a very clear signal. This is about building something that lasts. Other major players have received similar approvals, including Fidelity Digital Assets, Circle, Paxos, and BitGo. This puts Ripple in a category that goes far beyond a typical crypto company. It positions Ripple as financial infrastructure. Now, some people may ask, does this directly affect XRP price today? The honest answer is no. And that is exactly why price has not reacted dramatically. But price is not the story here. The story is perception, trust, and long-term positioning. When a company voluntarily steps into the highest level of regulatory scrutiny, it does so not for short-term optics. It does so because it is preparing for institutional scale. This is a shift in how Ripple is viewed, not just as a crypto company, but as a regulated financial entity. This is why many longtime observers are reassessing their stance. Skepticism fades when actions align with long-term intent. Ripple is not avoiding regulation. it is embracing it. That changes everything about how institutions interact with the ecosystem around XRP and the XRP ledger. At the same time, we are seeing continued expansion in real-world adoption. Amina Bank has become the first European bank to go live with Ripple payments, providing compliant bridges between traditional finance and blockchain infrastructure. This is not theoretical adoption. This is operational integration. This builds on earlier steps, including the adoption of Ripple's stablecoin solutions. Each of these developments may look small in isolation, but together they form a clear direction. Ripple is positioning itself at the intersection of compliance, payments, and digital assets. Does this guarantee immediate price appreciation? No, but it strengthens the foundation. And foundations matter more than headlines. What we are seeing now is a disconnect between price and progress. That happens often in markets driven by liquidity cycles. Right now, many participants are cautious. Capital is defensive. Traders are risk-averse. That is why even strong news can be muted in price response. Interestingly, XRP has held up better than many other assets today. While Ethereum, Algorand, and Hedera are down significantly, XRP is relatively stable by comparison. That resilience may not be dramatic, but it is meaningful. Short-term movements are unpredictable. No one can say what happens tomorrow or next week, but long-term trends are shaped by regulation, adoption, and infrastructure. And on those fronts, Ripple is clearly moving forward. This is why patience is essential. Markets move in cycles, narratives change, liquidity flows in and out, but structural progress continues quietly. So when you see price move against expectations, remember to ask a different question. Not, why is the market ignoring the news, but who is positioning while others are distracted? Because the most important shifts rarely announce themselves with excitement. They unfold slowly. And by the time they become obvious, the opportunity has already changed.